Good afternoon, everyone, and welcome back. This is Daily Trade Analysis with a quick market update for today, April the 19th. We are going to review mortgage applications and also what Netflix and Morgan Stanley and some news of Meta and also, right? Nasdaq gapping down, and what we did? Well, we are going to perform some technical analysis on that and some volume analysis and all that in a couple of minutes. But let's first start with MBA mortgage applications. Look at this, April, they are tanking due to demand destruction and also higher interest rates and credit pain. Banks have tightened the credit to the people, and also high interest rates make basically that people are not willing to take on those mortgages. Refinances is not really good, but overall the 30-year mortgage rate is still going higher, 6.43. So not doing good, right? Well, you know what is not doing good either? So Netflix minus 3% on the day. It's quite interesting that they are delaying their own pain. They are saying that, okay, we got slightly beat EPS and a slightly missed revenue, but what they are doing is more interesting. I think that is why investors are basically selling the stock, selling their positions. Netflix delayed the broad rollout of its password sharing crackdown, and this is going to cause them a big impact on subscribers. So even though they delayed this, they are not meeting expectations. And I think right now, if we check Netflix really quick, let me show you. Well, this is really not the case. They hold during the overnight, and right now people bought the dip, but I don't think it's having a nice day, because after yesterday bounce of 300, I think the outlook is not really good for stakeholders. When your business says that they are delaying bad news, they are just delaying bad news. There's no way investors are going to find good outlook on Netflix until they find a way of really land those delays in a perfect way. And I don't think investors are going to be there as of yet. So another one beating the dust. What else? Morgan Stanley shares fall after reporting rising expenses and declining revenue. They beat revenue, but look at this. And also EPS, but they are basically saying, it's almost flat, they are basically saying that the wealthy vision in invested banks research note, he said that they are excluding the benefit of low tax rates. So another one that is not taking advantage of these high interest rates and are not meeting expectations. So what are they doing then? That's a good question, right? Let's take a look to the chart and see Morgan Stanley. Well, another one that they bought the dip, but I don't think this is good enough. Let's see what happens, but I don't think that's good enough. Bank of America, did you remember that they reported earnings? They are down quite heavily since they reported earnings. They reported spiked up 2%, and since then they are down 2.50%. Goldman Sachs, the same thing. They are stabilizing down here. They were 5% in the red. Right now are 3.60%. And overall, banks are not doing pretty well, even though, again, let me tell you again, they are in a perfect storm with super high interest rates. If they are not profitable, if they are not beating top and bottom estimates, they are being mismanaged. And I think that's not good for the economy. Johnson & Johnson still at the bottom after earnings. So these earnings are not being quite good. And I think that's part of the reason why, well, before moving to the charts, one last news. Meta has started its latest round of layoffs. Remember that they said that in November and in March, they will be cutting 21,000 jobs. So they are continuing doing that. And you would expect that cutting expenses is going to be really good for them, right? So now, same as always, they were gapping down and they are trying to rebound, the same as all the Nasdaq. Let's go now to the Nasdaq and let's see what happens. So basically, remember that yesterday we gapped up and we basically reversed. If please check my video yesterday because it will open your eyes. The same as always. V reversals. Today, another one. Huge gap into the overnight, into the open. We were at some point minus 0.84. Then it started chopping around, and I don't want to be bullish on this market, but I will take every opportunity that I can. And this was a really nice setup for accumulation into a long. Let me tell you, this is not a super really great trade. It was just a base hit, maybe a couple of, it was 3 contracts scalp, because look at this, 0.45%. What is this? This is just not volatile enough for me to take the risk of going long. I think overall, the bearish sentiment will prevail and we are going to pull back at some point. But let me tell you, they are playing games with retails, with us. There's a clear trend, higher highs, higher lows. And if we check the 30-minute chart, you will notice something that if you are experienced enough, you will already notice. They are closing gaps. Gap up, gap close. Gap down, gap close. So if we check the daily, you can see that we are in a range since basically it was 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. It's almost 2 weeks of range bound activity. And this is nasty. I don't like this market. Look at these bottoming tails. You will see this and you will say, okay, long, then another hammer, inverted hammer, Goldfield candle, bottoming tail, doji, hammer, another hammer. What are you doing, man? This is just nasty price action. I just really hate this price action because basically we are in this, in terms of value, we are just in this range, in the middle of everything. They are just playing games. Is this distribution? Is this consolidation and accumulation for a move higher? We don't really know yet. What is true is that they are playing games with us. And you have to understand the rules of the game in order to be profitable. Nasdaq is pushing the gap. This is the purple line, that is the gap close. They are really going top tick. I don't know, but be careful with this because at some point we can correct and do a mean reversal. So be careful with that. We are in a strong channel after accumulation, but I think it's really clear that they are just averaging everything. Overnight is doing things, so they just reversed. And they are playing games. So if you want this kind of market, just go with the technicals. In the absence of news, usually markets are going in the same direction, but right now they are doing the same, V reversal after V reversal. Gap down, reverted to the mean. Gap up, reverted to the mean. You just have to see the charts to really understand that this is a really bad market. So let's check, even though this is a nasty market, let's check what kind of sentiment is prevailing. Look at Amazon. Amazon is just breaking this range and trying to go ballistic, despite the fact that demand destruction is just going nuts. So why is consumer discretionary Amazon doing this? Tesla would do the same, but they are waiting for earnings. So let's see how, even maybe there were some leaks on Tesla earnings and they were doing great, because Tesla is not just a matter of Tesla earnings. It's just a matter of really gather sentiment about demand. If Tesla is doing great on earnings, that would send other stocks, it would act as a catalyst for other stocks on the consumer discretionary, being Amazon, being Apple, being Nvidia, they will just skyrocket. So Tesla is the beginning of the really, really volatile market. That's what I think. Another markets, crude oil. Crude oil is not converging with the kind of movement that we are seeing in other markets. This is a really big gap that is being played around. We just tapped that, and let's see if we can hold, or I don't think we are going to fill this really big gap, but these red candles, this rejection of higher pricing is showing demand destruction. They don't think crude oil at this price is going to hold. And this is in the other way, in the opposite direction of the sentiment that Amazon and the overall tech is getting. So why are we doing this? I don't have an answer for that. I can just provide some more technicals and overall understanding of the markets. Look at this. This is gold futures. They are reverting the same thing. So yesterday, this overnight, it was everything was, this is the end of the war for gold. Look at this. They are still buying. They are still buying. Nice bottoming tail candle above 12,000 that is being bought up. So I wouldn't be surprised if this is going to retest 2078. Dollar. Well, if you think convergences and divergences are something, I don't understand why dollar is doing this. Really, after this weakness, having a bounce, let's check the 30-minute chart. We are holding these levels that basically are acting as support right now, 101, after this bounce of the daily level at 100 at parity. They push, they tried, they've been rejected, and they are now trying to ping pong again. This is a ping pong market everywhere, in gold, in the tech, in dollar, in forex, even in yields. Yields are going nuts everywhere. They are not consolidating anywhere. The only thing that they are doing consistently is just going higher. This is the 2-year that is after this market structure change, they pushed. The 10-year also pushed. Now approaching 3.64%. This is going nuts. And the most interesting thing that it's occurring in the markets, it's this. This is interest rates futures for December. Remember what I've been mentioning all this time, that bonds market were pricing in interest rates cuts? Well, this is December. They stopped pricing in on September any interest rates. We are going to raise rates most probably. Let's take a look at the probabilities. In May, with 86%, 82% of probabilities, we are going to raise rates by 25 basis points to reach 5%. If we check the probabilities and also the bonds market, look at this, all in the 5 until December, with only 1 or 2 interest rates cut. If we check bonds market, we can see that they are pricing in 4.71. That's more or less at 25 basis points, only one cut on December, when they were pricing in several interest rates cut along these, when all the SBB and all the bank issues, they were pricing in super cuts in order to support the economy. Now they are realizing that this is not feasible. I was saying that bonds market were in the wrong side of this decision. I think they are correcting. So why is the overall market, and more importantly, why is tech stocks are going higher with the outlook of higher interest rates? That's the key question. Why are we still at these levels? Look at this rejection of the If I was in the market, I would take a short right here. So as I was saying, why is tech stocks, Nasdaq is going nuts, doing reversals when there's a big outlook of high interest rates and being held at 5% for months? That's a good question because it makes no sense in terms of fundamentals. Fundamentally, for the economy, for the sensible tech stocks, there's no way at higher interest rates, gold or tech stocks are going to prevail at hold this value. There's no way. So my guess and my forecast is that all this is consolidation in order for distribution later on. Once Fed hikes for the last time and start pivoting and pausing, this is going to happen. And more than that, there are a lot of gaps being left behind at these levels, not only in the indices, but also in Apple, gap, Tesla, gaps everywhere. Look at this huge gap. This is going to be tested at some point. And I think they are delaying that until the interest rates is decided in order to basically dump everything they've been accumulating at these levels going short. That's my forecast, guys. Remember what I've been saying, I am justifying this with data and with markets. Don't follow the media if you think they are manipulative. When they think that everything is going okay, just be smart and think about other markets. Think and make your own decisions, your own analysis. I'm just providing my insight and my understanding of the markets. This is a clear short, man. If we retest this and we reject, I'm going to take a short with a tight stop up here. This is gap close into a big 30-minute chart resistance from yesterday. That one is this one. So pretty interesting level here. 1, 2, 3, 4, 5, 6, 7 green candles. It is what it is. So I'm going to end this video and start looking to maybe try a nice short up here. But before moving on, take a look at other markets, take a look at gold, dollar, yields, and try to understand why we are moving up on the Nasdaq and on the overall markets, while other markets very sensible to interest rates are pulling back or going nuts. That's your job. Try to understand what is happening despite the fact that there are technicals and FOMO around. Greed is off the roof right now in these markets, and greed is one of the most dangerous sentiments of all. Thank you for your time. As always, if you found this video useful, please remember to support the channel, like the video and subscribe to the channel. And I will be able to provide more videos for you. Remember that I upload new videos every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. I appreciate new subscribers, new likes. I appreciate you really supporting the channel and liking the videos, because we as day traders, this is very difficult, and there's always something that we learn every day from not only the markets, but also the people that have experience. So I appreciate time liking the videos and spending time watching my videos. So thank you for all. And remember that discipline and risk management are key for success. The trading day is not over yet. We are approaching lunch time and into the power hour. And I think this market, it's due for a pullback. I will try to take advantage of that. And if not, with a tight stop, I will just call it a day and wait for tomorrow. This market basically sucks. This market is just playing games with us. V, another V, another V. This is just a nasty price action. So be careful out there. Stay safe, everyone, and see you tomorrow.